I get this question all the time. What will happen with the Bitcoin halving or halvening, however you want to call it? What will happen when the newly issued supply of Bitcoin gets cut in half? From currently 1.73% per annum roughly to half of that. Will this again trigger a new rally in the price? In the past, this is pretty much what happened, right? In the past, whenever there was a halving event, it didn't necessarily mean that the price directly afterwards shot up. Actually, we normally saw a bit of a correction, but in the subsequent, say, 12 months or so, we did see relatively massive price increases. And so thus then we also saw this 4-year cycle, right? The idea of that every 4 years we see the bear market of a year roughly, and then those other 3 years we see a bit of accumulation, etc. And then a real massive rally, a real shoot to the upside after the halving. So will this happen again? And of course, nobody knows for sure. But what is pretty safe to say is that the halving itself, as in mechanistically, the reduction in the new supply itself, is not going to drive prices a lot this time. It will actually be less and less important of a driver going forward, because you'll always see that halving every 4 years, but the difference in the new supply will get smaller and smaller. We'll get cut in half every year, or every 4 years rather. So there isn't that much impact anymore, right? We only have less than a percentage point in the entire year of additional supply that gets reduced. Every year, roughly 2% of all of Bitcoin supply get lost. So that's an estimate, right? This is simply just based on the Bitcoin that hasn't moved for like 10 years or so, right? That tends to never move afterwards. Roughly 2% per annum already gets lost. So already in the last 4 years, we had less Bitcoin mining with the 1.73% compared to the Bitcoin that got lost. So we already have actually, just in terms of the liquid Bitcoin, a shrinking supply. So we already have the hardest of the monies. We already have ultrasound money in Bitcoin, as in money that doesn't expand anymore. Very different to, for example, the gold supply. The gold supply grows relatively fast. It goes faster and gold gets lost. Now, it's always a positive, of course, when the newly added supply shrinks even further, but it's not necessarily enough of a price driver. We already see shrinking supply in Ethereum. So Ethereum is being used enough that the burnt Ethereum through the gas fees outpaces the issuance. Thus, we actually currently see a net shrinking supply of Ethereum. But yet, we do see how Ethereum relative to Bitcoin lost in terms of price since that merge, since the move from proof of work to proof of stake. So we now have way less Ethereum supply. We've even got a net negative issuance, and yet the price isn't doing that well. So what's happening here? The main driver for the price isn't the supply anymore. The main driver right now is demand. It's not supply, it's demand. The question is, where will future demand come from? And where is it currently coming from? For Bitcoin, that's relatively clear, right? A lot of the demand is now coming from the Bitcoin ETFs. And we can relatively track this quite nicely. How much new Bitcoin is getting absorbed by the Bitcoin ETFs? How much is currently getting sold through the Grayscale Bitcoin Trust? What's the net delta? What's the net delta annualized? We can estimate roughly how much new Bitcoin is currently getting absorbed in this new traditional finance ecosystem. It's currently not that high, actually. We used to be at 9% annualized. Now we are at roughly 1% annualized. Still more than the Bitcoin that's being mined. So in aggregate, still the supply shrinks further and further. Right? Bitcoin gets lost, Bitcoin gets sucked up with the ETFs. But it's not phenomenally much. It's not necessarily that much that we could expect a doubling of Bitcoin's price every year, unless the fiat system suddenly starts to collapse, which is relatively unlikely.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com. Link is down below.
For Ethereum, we don't see that demand. For Ethereum, we don't have an ETF. Some people think that at some point we will, right? There are some applications running by Fidelity and by BlackRock, but there's also the fight going on between the SEC and the Ethereum Foundation. So will this in the end resolve in favor of Ethereum? Who knows, right? And who knows how fast this will happen. And because of that uncertainty, I actually believe that Ethereum is likely going to continue to underperform Bitcoin until at some point we get real nice rumors around the ETF. Before that ETF, I don't think a lot of additional money will flow into Ethereum. And this will then also weigh on the altcoins, because a lot of altcoins are measured relative to Ethereum. So when the altcoin price is determined by the ratios in the liquidity pool, and the liquidity pool on the one side has Ethereum, on the other side the altcoin, and then Ethereum goes down in US dollars, then the altcoin also goes down in US dollars. So you've got a direct coupling there. So yes, tokenomics do matter, especially for altcoins that increase their supply, say by 30-40% every year. For that case, of course, tokenomics matter. But when we look at only a change from 1.7% per annum to 0.8% per annum, and this doesn't really impact that much. 0.8% in the entire year. How much is this really, relatively speaking, to the ups and downs that are created, say, by the long-term holders, right, that try to sell high, and then that dollar cost average during those bear markets? It's not that much of a deal. What really matters is what are the whales doing? And luckily enough, for the blockchain, we've got all of that data, right? There is this nice website. It's one of my favorite websites actually in all of crypto. It's lookintobitcoin.com. Lookintobitcoin.com. Feel free to check it out. It has all kinds of interesting charts. For example, the value days destroyed metric, or the market value to realized value z-score, or the number of wallets that hold at least one Bitcoin. There's all kinds of interesting statistics to show current adoption, to show how currently the long-term holders of Bitcoin behave. And you want to be with that smart money, right? You want to be with the people that tend to buy low and tend to sell high. And when you currently see there are a lot of people that normally just hold Bitcoin over the cycles, when they suddenly start selling, then maybe it might make sense to sell as well. So you want to keep your eye very closely on those numbers. And this is where the blockchain for the individual investor is very, very much a gold mine. As in, you can time the market better by using all of that data, which we do not have in the traditional finance ecosystem. We don't know what the long-term holders of a stock are doing when a stock suddenly goes down. Is this panic by the people that are very well informed? Or is this actually the masses all exiting? We don't have that much information, but for the blockchain, we luckily do. So don't necessarily just simplify your approach by looking at 4-year cycles. There is, of course, a self-fulfilling prophecy effect to this. If everybody expects the price to go up, of course the price will go up because nobody will sell. But this is only one among many effects. You can also look at all of the data that's available on pages like lookintobitcoin.com and have a more refined idea of how to time the market. Why not use all of that data? Why only rely on price data when we've got all of that hidden data in the blockchain that also tells us much more refined stories where you can actually figure out what the smart money does? And so that is what I really focus on. I don't really look at price charts that much. I don't really look at logarithmic regression charts that much. I simply just look at the long-term holders. I look at the people that normally do not sell. Are they currently selling? And when they sell, then I'm selling as well. When they don't sell, when they accumulate, when they're buying, then I'm buying as well. I'm simply just doing what the winners are doing. So for me, my winning strategy is to simply just follow the winners. I don't have to reinvent the wheel. I simply just have to do what other winners are doing. And when I do the same things that other winners are doing, then I become, simply just by doing the same things, also a winner. I don't have to understand every single detail of why they're doing this. If they get out, then I get out as well. And I will, of course, let you know when I see those things, right? I will share when I'm personally selling as well. So feel free to subscribe to see videos regularly like this. I like what we very much appreciate as well. It helps the channel grow. See you next time. Cheers.